If you're feeling pain in the markets right now, you're not alone. It seems like we may be on the brink of a recession potentially. We'll talk more about that in a minute. But our president of the United States has said that he would be fine with a recession happening. So, that I'm sure was not something that market participants wanted to hear. This is the crypto simulation. It really feels like one these days. I am the Gaussian snake, and everything I'm about to tell you is not financial advice. This video is a follow-up to my previous crypto market update video, which you're encouraged to watch. I'll link to it at the end of this one so you can see how we kind of saw something like this potentially coming based on the technical indicators. And now we need to think about where are we going from here? What could this correction look like? Are we going to head into a recession? I mean, I don't have all the answers to all those questions. We could just look at what the data is telling us now and then come back and revisit this again. So I'm going to start with the stock market and then work my way on down all the way to the altcoin market so we can get a really clear picture of just what we might be in store for. Let's go ahead and get started. You can see here we have the stock market pulled up on the weekly time frame. It is not looking particularly good. So if we zoom in, we have not spilled out like the way that we're spilling out now since Q4 of 2023. Now, it is entirely possible, right, that we have a moment like Q4 where we achieve some kind of rebound off of the Gaussian channel. We are literally right on it at the moment. So that is something to keep in mind. This looks like a spill out in the making, but there are some other concerning things going on. I talked about them last week. I'm going to go ahead and remind you what those are. So unlike the Q3 2020, the Q3, Q4 drop that just tested the 200-week whole moving average, which is in red here. This is the white is the 100-week. We look like we are on the verge of a death cross of the 100 and 200-week, and that has never been a good thing. The last time this happened was in April of 2022, and that resulted in a bear market for the stock market. This was not a recessionary bear market. This was merely just a correction, but it's looking like, well, we've got another correction that looks much more similar to this one from 2022 than it does to this one right here. You can watch my previous video. I don't really want to go through all of it again, but let's just say that a death cross of the 100-week with a 200-week with price action being below the 200-week is generally an omen of at least a somewhat nasty correction, and it could even be a recession in the making. So that is just something I wanted to remind you about. If there's any good news, I'd say take a look at the Snabble RSI. The Snabble RSI right now is at the green zone. We discussed this being a possibility in my last video. This value is getting hit right now in March of 2025. It was last hit in October of 2023, and before that in May of 2022. There's some significant levels we're hitting, and as you can see, we tend to not spend a lot of time at them. So what does this mean? Does this mean that a potential bear market has been averted and disaster has been avoided? No, it does not. It just means a bounce is likely coming soon. We have a clear end of a bull bubble on the weekly time frame. Now, the bear bubble that we're likely to get could be a small one, right? We don't know. Or it could be one like 2022 or somewhere in between 2023 and 2022. Really not enough data to tell us exactly how strong of a bear bubble we're likely to get. But the odds of some kind of bounce happening are increasing. And I think if the stock market doesn't bounce this month, and I think it could bounce this month, by April, I think we're definitely going to see a pretty significant bounce. The only thing is, looking at recessions from the past, you can see that bounces don't always mean recovery. I'm going to point out a few stock market drops that have occurred in the past. If you look back to 1987, specifically October, from October to December, about 3 months, we had a pretty brutal drop, and then it was just a nice recovery. And then there was another kind of valley that happened in the 90s. Well, we didn't really have a recession. I mean, look at these drops that happen. Like you can never really call a recession ahead of time. By the way, I'm not saying we're in a recession. In fact, right now we're not. But now let's get to an actual recession and see how these things behave. Right. And I'm not saying this is what's going to happen to us. I'm not saying that at all, but let's look at like .com. .com started to tumble down, right? And if I put on the 100 and 200 week, you can see the death cross, right? The death cross happened. And that's, I mean, there was a death cross, of course, even in 98, and that didn't mean a thing. So we don't know which kind of situation we're in just yet. But you get this like tumbling down, right? Behavior. And so, you have the end of the bull bubble, you get to some pretty low levels, like where we're at now, October of 2000. And the Snapple RSI went up because we got some bounces, but they ultimately didn't mean a thing. We just came right back down, came up just to come right back down, came up just to come right back down. Okay. And we have to keep mindful that we are in a rate cut cycle, and a rate cut cycle is more likely to plunge us into a recession and a hard landing than not. Okay, I'm not saying we're going to look like .com and spend years in a recession. I'm not saying that at all. Here's another recession that happened in 2008. This is the Great Financial Crisis. We got down to this level in January of 2008, bounced, didn't mean a thing. Bounced, didn't mean a thing. Pretty harsh decline. And then yet another decline, right? Like this was brutal. And then finally the bull market started again. Okay. So it's hard to say exactly what's going to happen now. We only have history to look at. It could be an event like the 90s. Could come down a little ways and then recover maybe into the summer and fall. We could see like a bear bubble form here that doesn't last for too long, or we could just have a series of drops and drops and drops, and we can end up in a really long recession. I don't know which is going to happen. I have no idea. But the data is definitely pointing to some kind of bear market that is likely materializing. Whether this only lasts for a few weeks, a few months, or lasts for a year or longer, we don't know. But we can only look to these indicators to kind of get an idea of like where we're at. We're in an area where we should see some kind of bounce, but it could just be tumbling down, right? Those could be the kind of bounces that we see. So that's just something to kind of be aware. We do have an FOMC meeting coming up, but and we should take a look at what the market is pricing in terms of cuts. I'm sure the needle's moving on that. But even if the Fed does cut rates, history shows us the market will probably tumble anyways, because the Fed always waits too late. The only time that we kind of got out of this without having a recession was back in the 90s, right? 1992. 1992, we actually averted a recession despite having rate cuts. But that is an exception, total exception to the rule. Most of the time, when you get rate cuts, the market comes tumbling down along with it. Okay, you can see this in the 70s as well. Just the market just comes tumbling down, and then once you reach a rate cut floor, you can see some recovery in the market, right? So when might we, I guess the odds are that with rates being where they're at, that we are likely to see quite a decline in the market, right? That's just what history shows us. And we see the 200 and 100 having crossed. So let's take a look and see what the federal funds rate predictions are from market participants. So a lot of people think that the Fed's going to cut rates at the March 19th meeting, but 95% of market participants don't think so. And I agree with them. The stock market, although it's seen some damage, hasn't really seen enough damage to justify cutting rates. If you look back in history, they wait for worse. But if we go to the May meeting, it's almost, the majority is almost in favor of some kind. It's 50-50, right? There's even a small group that's coming up and saying the Fed might cut rates by 50 basis points. You get to June and it's baked in. We're going to get rate cuts by June. But think about it. Between now and June, how much damage could happen to the market? And if they're just starting to cut in June or just starting to cut in May, things could get a lot worse before they get better. In July, they're talking about, a cut. So let's go ahead and put this on sort of like an a probabilities chart. And you can see that the probabilities are, well, they're in favor of kind of, staying the same right now. From May onward, we're looking at cuts. So where might we reach our rate cut floor? The first floor we could be looking at could be in the summer, right? And typically when you reach a rate cut floor, the market tends to bottom. That tends to be what happens. But what if we get a recession that goes on for a long time? Could it be March of next year when the market bottoms. So all these things are possible. And anybody who tells you that they know the answer for sure is lying to you. I personally, my own belief is that whatever market downturn we're about to have, I don't think is going to last all the way through next year. I could be wrong about that, but I don't think it is. I think once we see a few rate cuts and we see a possible recession materialize, I did want to look at some data with you to show you that I don't think we're in a recession right now. But even if we're in an extended correction, we miraculously get a soft landing, which I doubt we will. Um, I don't think it has to last for super long. Like, I don't think it has to last for over a year, but that doesn't mean that it can't. So we should be prepared for all possibilities. So I want to show you some data that makes me think we're not currently in a recession. Okay, so this is the unemployment rate, which is one of the last things to move in a recession. By the time your unemployment rate spikes, your recession's probably just about over. Unemployment has been trending in the wrong direction. The right direction for a recession, but the wrong direction for a healthy market. Now, we weren't that concerned about unemployment down here in November of 2022, but it has been trending up and it has been challenging its red concave down widened Gaussian channel. Only reason the Gaussian channel is so wide is because of this crazy spike. So we should watch to see if we get a rejection here, which would mean unemployment's going down or unemployment's going up, but there's no evidence, even though the unemployment rate is at 4.1%, that we're currently in a recession. Initial jobless claims has just simply been going sideways for the better part of 2 years. So once again, no evidence here that we're in a recession until this starts to trend upwards. Okay, continued claims. These are continued unemployment claims. I don't know what these trend lines are for. I probably drew these a long time ago. Does seem to be trending in a concerning direction. It is trending up. It's not doing so aggressively, but again, it's heading in the wrong direction. You don't want to see that. The one metric that has me thinking that we're potentially not heading into a recession is the inflation rate. And I'm not talking about the Bureau of Labor Statistics, which is what you're seeing here, data, but look at the Gaussian channel. It's about to flip red from all this downward action. This is a lot of bearish momentum. We are seeing a potential rejection at the Bollinger Band median line. We'll have to see how this plays out, but just seems like a series of lower highs on the way down. Inflation seems to be getting under control, even though I know there was a lot of fear about it. So that could be one thing that makes all this bear market recession talk kind of not happen. Inflation usually starts trending up in recessionary times. I'm not saying that it has to, but seeing that inflation itself looks kind of bearish is actually kind of a good thing for our markets, I think. Inflation is looking good. I mean, the Trueflation US Inflation Index, which uses far more data than the Bureau of Labor and Statistics does. See, the US government is reporting 3%, but actually we're looking at 1.35%, which is near the year-to-date low. Inflation has come way down, and Trueflation has a way more accurate measurement of inflation than our government does. So you've got like some things moving in the wrong direction with the continued claims. Initial claims doesn't look bad. Unemployment is trending in the wrong direction. But then you've got inflation looking really good. So this puts the Federal Reserve in a bit of a bind because there's not enough damage in the economy for them really to justify a rate cut. I mean, like at this point. And that is concerning because it certainly seems like the stock market has further to tumble down, but it really could just end up being a correction, right? It doesn't have to be a recession. I'm not saying we won't get a recession. We most certainly will. It could just be that now is not the time. And the inflation data definitely points us in the direction that now is probably not the time, right? So that's one huge counterpoint against a recession. US oil is typically something that we see go up during recessions. We're not seeing that right now. We're seeing US oil just kind of range, and it's ranging at the lows. Now, it is establishing a pretty strong bottoming structure. This could be concerning if this trend reverses. So I will mention that. But currently, oil prices have actually been heading down, not up, although you wouldn't know it in California where I'm at, but still. This is just range bound behavior, not recessionary. The US dollar is falling against the yen. So I mean, like, in fact, it looks like it's about to fall a lot. And that's probably corroborated by Dixie as well. So it looks like the reverse carry trade is not happening right now. Dixie is actually down at the 236 fib in this very like range bound behavior, got rejected at the 618. Dixie looks bearish. So it looks like the dollar is actually losing value against other currencies. That's typically bullish for risk markets. Not bearish, but bullish. Does not look recessionary. Overnight reverse repos are way down. They're at some of the lowest levels they've been at since 2021. This may change soon. Okay, this does seem to be forming some kind of bottoming process. So we'll keep an eye on this, but nothing looks that bad right now. If there's money moving anywhere, it's into gold. Gold looks really strong compared to anything else that I've seen. It is struggling a little bit with its 20-week whole moving average, but it's clearly above all the other moving averages. Looks far better than anything else, right? Better than the stock market. So that that is something that we might see during a recession, is gold moving up very aggressively, or even before a recession, we might see people piling into gold. But the other indicators just aren't there, right? So this isn't enough to make me think we're heading into a recession. Although the SOM rule did trigger not that long ago, I do want to acknowledge that it did. It currently is not saying recession. It is at 0.27. In fact, it looks like it's heading down somewhat. I imagine that could change soon. The SOM rule is not in an area where it would be calling for a recession right now. Our smooth recession probabilities are just super tiny. Admittedly, by the time this starts moving up, right, you're probably in a recession or pretty close to being in one, but not seeing anything kind of really moving the needle much, right? If we zoom in on the scale, yes, it is moving up, and it is at the same levels it was at in September of 2024 and at similar levels to September of 2023. It could move up, right? But it could just be a spike. It could be a spike like we had in January. It could be a spike that we had in October of 2022, a spike that we had in July of 2021. None of those spikes was a bear market. Now we won't know. I mean, sorry, was a recession. Again, we won't know until we know. If we look at GDP, we can see GDP has been flattening out, and I know that there were some. GDP is down, consumer confidence is down compared to where it may have been at certain times last year or in the past few years. You can see this is trending in a concave down kind of way. I'm not really sure if any averages will mean a whole lot here. I mean, averages always mean something to me. We are trending below the 20. This would actually not be weekly. This would be, I think, this is quarterly. Okay, so this is actually, if this is quarterly, this is a pretty significant moving average then. So we are trending beneath the 60 month. So what is 60 months? 5-year moving average. We're strongly above the other one. So GDP has been slowing down. You can see the slowdown happening, right? You want to see it above these averages. You generally don't want to see it below. That's not a great thing. Okay, so this is trending in the wrong direction, but it's not necessarily recessionary just yet. The U.S. Treasury yield curve is still in the process of uninverting. This has been one of the longest, if I'm not even sure if it may be the longest uninversion process ever. That is possible. You can see that the rates on the higher end have been increasing, but you haven't seen the rates on the shorter end decrease, right? It's in the middle. It's a very strange looking yield curve at the moment, but hopefully this sorts itself out. And we've typically seen recessions happen during the uninversion process, or once it's fully uninverted even. So that is something just to watch out for, but it doesn't seem like we're anywhere close to this being uninverted at the moment. So hard to say, again, this is kind of, I would say, neither bullish nor bearish at the moment. Okay, so this is weekly Bitcoin, which I'm sure you've been watching on your own. Weekly Bitcoin has had the death cross of the 20-week HMA with the 50-week HMA. That was back in February. The 50-week is turning down. We have not had a death cross of the 100 and the 200 week, so that is notable. Okay, that is a notable thing. Hasn't happened for the stock market yet either, even though it looks like it might. Typically, a death cross of the 100 and 200 week is not a good thing and does lead to some pretty bearish momentum. We have seen this happen a few times. It happened at the end of the bear market, or towards the end of the bear market from 2018. It happened kind of towards the beginning of the bear market of 2022. And it happened, that's a golden cross. It happened about kind of towards the end of the bear market of 2014. So, I mean, it seems like it's moving up more and more in terms of like when it happens in a bear market. Yeah, so I mean, if we do get a death cross of the 100 and 200, then we are pretty much in a full-fledged bear market at that point, based on history. Because even when we had the March 2020 drop, it did not result in a death cross of the 100, of the 200 with the 100, right? Like it didn't happen. You had the 100 stay above the 200 throughout this entire move. So this is key to watch to see if we do in fact get a full-fledged bear market. Although by the time the death cross happens, the bear market may already be, you know, quite a ways underway. All right, so yeah, I mean the indicators don't look good, but they also don't look terrifying either. We do have a red zone that I put on here. This is my new red zone since my old red zone already got hit and sliced through. This is between 73 and 77K. Now, why did I choose that as my new red zone? Well, I do believe that there is some support at this level if I put on the fibs. We haven't been looking at fibs lately because, well, I mean, there really hasn't been much of a point to looking at them. But I think now is a good time to pull them up again. So we do have the one fib, and the one fib was a very difficult fib level to get above. And I think it's going to be a difficult level to get below as well. We have a double top that happened, but on a smaller time frame than, say, the double top of 2021, right? You had a double top in 2021, and then you had this bear market, and it had bear market rally after bear market rally, and then finally stopped. So I think we could be seeing something similar playing out right now, but on a smaller time frame, which means less dramatic rallies, right, to the downside. So the first area for support I'm kind of looking at is between 73 and 77K. I'm not sure if that will hold, but it is certainly a reasonable area to look for support. If I throw a Gaussian channel on here, we are still a little ways above the Gaussian channel. Now notice that the top or the upper boundary of the Gaussian channel has started to enter into the red zone. Okay, so if the red zone fails to hold, I feel like the Gaussian channel will be the next place to look for support. And so that is moving up. It is around 73K. If that fails to hold, I would look for the median line of the Gaussian channel, which at that time could be around 66K or something like that. Now, I'm going to also pull up the 300-week and 400-week whole moving averages, which I never thought I'd be doing this soon, but we should take a look at them. Maybe even the 500-week. I don't know if we have enough data for 500 weeks, but let's go ahead and take a look at all of those moving averages and kind of see where they're at, just to get an idea of maybe some major support levels that might exist. Some of them probably in the Gaussian region. So keeping the weekly Gaussian green is probably something we want to see to avoid a long bear market. I know this is going to turn down. There's a possibility it could go red at some point this year, but let's not, put the cart ahead of the horse. Let's see what the data says. Telling you guys, I love the whole moving average. So this like light purple HMA is the 300 week. The dark purple is the 400 week, and the dark green is the 500 week. So I think if you're concerned that Bitcoin is about to head into a bear market, one of the things you might worry about is getting beneath. I mean, look at how far beneath the 500 week we got in 2022, right? If you think we're still in a macro bull market and we can somehow maintain some sort of bullish structure, then we'd like to see price hopefully hold at the one fib. I don't think that's likely to happen, however. So I think we are likely to see some intermediate pain. So, I mean, the 300-week whole moving average is around 65K. The 400 just barely got above the 500. They're roughly around 60K. I'm not 100% confident those levels can hold, but there's certainly areas where we could see support, okay? Price does get sticky around these moving averages. And, a 300-week is certainly pretty significant. If we go back to like 2022, we can see that our bear market rally that we had coming out into January, right? We got underneath the 200-week and then fought a little bit with the 300-week, but then we actually kind of ranged between the 400 and 300 for a little while. We sliced right through the 500, so I'm not sure how relevant of a moving average that is. but there was some, slicing that happened here. And then on the way back up, the goal was to get back above the 200, which we did. And then things just got kind of explosive from there. So that is one area where you could be looking for some support potentially. I'm not 100% sure it will hold up, but it's something to consider. Just for fun, I put a 750-week whole moving average. That currently is at 52.5K. I imagine a 750-week moving average would be pretty hard to take out. Interestingly enough, it's kind of corresponding to these breakout levels from January of 2024 through early February. So just something else. So I do think that Bitcoin's going to get a bounce pretty soon. I don't know how substantial of a bounce it'll actually be. But if you look at the bear bubble, we have or the ASO, we exited our bull bubble. We're now forming a bear bubble. Snabble RSI is so low. I mean, this thing just seems like it's due for a bounce. We're at levels, honestly, we haven't seen since 2022. Okay, so we're at levels not seen since May of 2022. And remember, in May of 2022, the Bitcoin bear market was halfway over. Wave trend, we are now getting down near the 0 level. These are levels not seen in quite some time. I mean, last time we saw these, we saw this level was in August of 2024. We still went down a little further from there. So definitely room to fall. There's, if we look at like in 2021, coming into the bear market, November 2021, let's shrink this up down so we can compare levels. We were at this level that we're currently at. It looks like May of 2021. That was during a pretty scary time for Bitcoin, but Bitcoin ultimately went on to put in a slightly higher high. If we want to compare to after that slightly higher high, we're at levels that we last saw in December of 2021. Now that's not exactly comforting, is it? Because that was the beginning of a very long bear market. So we need to be open to that idea that this bear market could drag on for quite some time. But seeing where the Snabble RSI is at, anytime we get down to these levels, like in 2018, for instance, we had a bounce, pretty significant bounce, right? Even in March 2020, we got close to these levels. We had a bounce. June of 2022, it was a change in trend. So whether this is like a bounce that takes us back to the bull market or a bounce that just results in a macro lower high, that I cannot tell you. Just like I couldn't tell you it with the stock market. And I think a lot will depend on what happens with the stock market. But a bounce seems to be coming somewhat soon, within the next few weeks, based on the fact that we are in that territory where bounces typically tend to materialize. When I go to the 2-week time frame for Bitcoin, things look pretty bearish, right? This structure, this looks like a bull market structure. It looks like we had like a full bull market, and we're about to head down into some kind of bear market, bear bubble, and then come back out into a new bull market. That's how it looks. Massive head and shoulders on the Snabble RSI, a lower high on the wave trend, and then what my favorite indicator to look at is, that would be the RCMO. So let's go ahead and pull that up. The reverse Chandé momentum oscillator, and it is printing that shoulder. It's printed the right shoulder. We've got shoulder, head, shoulder. I think it's got to come down pretty far, and it may have to come all the way down here. Now the question is, how long will that take? It could take a while, right? Or it could come quickly. Like we could be down here by the fall. We could be down here by the summer. So my point is, we've already been pretty bearish for a little while, and it may surprise you. Bitcoin may not fall as far as you think it might. Let's look at this Gaussian. One of the things that's very curious is the 2-week Gaussian channel. The 2-week Gaussian channel had this beautiful inflection, right? Just beautiful inflection. It's still very tight. The bottom, if we do head to the bottom of the channel, that's around 60,000. That's where the 500-week and the 400-week whole moving average are. So that could be an area where this bear market finds a bottom, and that could be enough to throw the reverse Chandé momentum oscillator back to levels where it can reset and start again. Okay, we knew that the March 2024 top was a significant top, right? We've talked about that ever since the start of this channel. And we talked about the possibility of a head and shoulders on here even last year. And then I got a little delusional with price at some point. But I think this right shoulder is very likely to complete. But the crazy thing is, the Gaussian channel might still stay green while this thing happens, meaning that this is just like a prolonged secondary scare, kind of like what we saw in 2020, but just stretched out over a longer time period. And that has been something I've been talking about in my Telegram channel for the past couple weeks, which is this really doesn't feel like the end of the bull market, even though we're getting a technical bear market. Like, it's hard to argue with that. It doesn't feel like the end of the bull market. It actually feels like a major retest of bullish structure. And that retest could happen at many levels. It could happen here at the top of the Gaussian channel. It could happen at the top of the Bollinger Band, which is still in an uptrend. This is on the 2-week time frame, guys. Worst case, I mean, it could happen here at the breakout highs that we haven't retested at 32K. I don't think it's going to go that low, but it could, right? Like, it's foolish to assume anything can't happen. I mean, we're still at a risk level of 46. Zero risk has almost moved up to $40,000. Now, risk will move down if price moves down. This is the PanXBT risk metric that I've been using since it was created. And it's been a good risk metric. So one of the things about this particular market cycle that makes it differ so much from previous ones is we never reach the top risk bands. So if we get a bear market right now for Bitcoin, it's not the kind of bear market you traditionally get after your upside ROI has been exhausted. So my thought is this could be a very quick bear market. It could be over in a few months. Yes, price could drop pretty darn low. Could it drop all the way down to the 0 to 20 risk band? It could. It's possible. I don't know if it will. We could stop out in the 40s. We could stop out in the 60s, right? We need to be open-minded to different possibilities. But I think the pace at which this bear market evolves is going to be very quick and be more reminiscent of what happened in previous cycles during what has been known as a secondary scare. That was coined by Ben Cowan. And I think it's an appropriate name to describe what is very likely going on right now. So I'm talking about the March 2020 drop. That was a recession. It happened very quickly. I do not think our recession will happen as quickly if we get one, right? I'm calling it bear market recession because I honestly don't know what it's going to turn into. But this was a bear market. It was very short. And it was exactly what was needed to retest the bullish structure from back in 2018. And if we go back in time even further to 2016, we had a double bottom. And then we had another scare in August of 2016. Double bottom in 2015, another scare. These were all retests of bullish structure. And then in 2011, we had a drop. Was that a bear market? Sure. But we bounced out of it quickly. Had a drop in 2013, bounced right back up. So I think that we're more, I don't think we're going to take out the 2022 lows. I don't. I think we're going to find support much higher than people think we will. And I think it could happen. It could happen at the 1 fib. It could happen slightly below the 1 fib, right? It could happen at the 300, 400, the 400, 500 week worst case scenario, right? I don't think we have to necessarily get price all the way down to like 32K. Okay, I actually think that's kind of unlikely. And I also want to point out something as well. Look at the volume. It's just been declining and declining, not only buy volume, but sell volume as well on this time frame. That's something else to keep in mind. Okay, another reason why I don't think that this bull market really ever happened, other than for Bitcoin, is look at total crypto market cap. Like, I want to show you like how little it moved. Total crypto market cap only put in, compared to its 2021 top, a 24% move. Now, what bull market do you get a 24% move? Like, and that's it, right? Like, I don't know of too many bull markets where 24% moves a needle. And if you look at like total 2, it didn't even put in a higher high. Total 3, same thing. Total 2 is crypto market cap excluding Bitcoin. Total 2 is excluding Bitcoin I'm sorry, total two is excluding Bitcoin. Total three is excluding Bitcoin and ETH. Looks very similar, right? Like a macro double top. Why is all this happening? Well, let's look at USM2, which is the United States money supply. I want to point something out. Something very simple. It's this green line right here. The US money supply has not put in a higher high yet. I want you to think about that for a second. Look at what happened. In fact, let's go ahead and throw a Bollinger Band on. I know it's kind of silly to put these things on economic metrics, but they do work. They do work. We're in the upper portion of the Bollinger Band. We're coming off of it a little bit. This also makes me think we're not about to head into a really long recession. If it happens, I think it'll be fairly quick, on the order of months. So you see the evidence is starting to come together. What was happening in 2020? I mean, the money supply, look, the money supply has been in a steady increase forever, right? Wow, we had this giant spike in money supply. So as long as we see money supply starting to come up again, in a more meaningful way, which I think is highly likely, because the Fed is going to have to cut rates if the stock market keeps going down, which I think it's going to. Yes, there'll be bounces along the way, but the Fed will be forced to cut rates by the summer or sooner if they've done too much damage to the economy. And with inflation at super low levels, according to Trueflation, which we should see the BLS start to reflect that pretty soon. It's hard to not see more liquidity entering into the system and money supply getting back on the track of what it needs to do for the U.S. not to default on its debt. Okay. So again, there's more signs that we're not heading into a really horrible recession that's going to last for like a year than there are signs saying maybe a few months of pain. That's kind of what I'm seeing. And I don't even, and there's going to be bounces along the way. I mean, we already look like we're due for a bounce possibly this month, like near the end of the month, based on indicators, and certainly by April. Okay, I have to acknowledge that ETH Bitcoin put in a lower low. It did. Happened today. This is an unbelievably long bear market for ETH Bitcoin. It's still ongoing. I thought it was over, but it's not over. It's unbelievably long. Like, I can't even, when did the bear market for ETH Bitcoin start? Let's just say it started in November of 2021, right? 1,200-day bear market for ETH Bitcoin. 1,200 days. That is almost 30% longer than the last bear market that happened for ETH Bitcoin. Okay, 1,197-day bear market. Let's go back to the previous bear market for ETH Bitcoin. 819 days. Now, you could extend it to here if you wanted to, but that was technically a slightly higher high. Wow. That is unbelievable. So you have to also think about ETH Bitcoin. Now, it is possible, right? It's possible that ETH Bitcoin becomes a long-term bleeder against Bitcoin. I should just say ETH Bitcoin becomes a long-term bleeder. ETH Bitcoin is ETH against Bitcoin. But like, we can still maintain macro bullish structure, although we've broken below the trend line, which I don't really like, if we stay within this red zone. And I think it's highly likely we do. This red zone is 0.017 to 0.02 Bitcoin. Bitcoin, right? How far are we from achieving that, that decline? I'm glad you asked. The top of the channel is around 14% down from where we are. The bottom of the channel is around 26%. If we should go below that channel, ETH Bitcoin is a bleeder. There's no two ways around it. But if we test the top of this channel, or get near the top of the channel, because there is support here, ETH Bitcoin could still be an oscillator. And the difference between being a bleeder and an oscillator has huge implications for the Ethereum network, for crypto in general, and for altcoins, because if ETH is a bleeder against Bitcoin, that's not really sending a very good message to the public about the crypto market. That's sending the message that Ethereum is a failure. Like, sure, it will have bounces along the way, but it's not a very encouraging sign to be sending to the market. Okay. I think, and it's not just my own confirmation bias that makes me think this way, but I do think that there's a good chance that Bitcoin is an oscillator. I actually think it's more likely to be an oscillator than a bleeder. We also have a lot of, look at the sell pressure is really down, like compared to where it used to be. Look at the Gaussian channel. Okay, straight up concave down. Ugly, ugly. There's so much room to bounce here. I don't think we're going to bounce until Bitcoin bounces, but that's the thing I'm going to be watching. I'm going to be watching to see how does Bitcoin behave. I mean, how does Ethereum behave when Bitcoin gets a bounce, even in a bear market where it gets a bounce? How does Ethereum behave against Bitcoin? Does it start to show some strength, or is it still ugly? Now, one of the things we know is that ETH Bitcoin usually doesn't move until quantitative easing takes place. That's really what we need to see. If I overlay ETH Bitcoin with, let's overlay it with the federal funds rate, we can see ETH Bitcoin's major move happen when the Fed got near a rate cut floor. Okay, so I think we need to see some more cutting. So I think ETH Bitcoin may in fact bottom in this red zone. Wouldn't that be something if it put in a triple bottom? I'll take it. I will take it over it being a bleeder. Okay. So ETH Bitcoin still has some room to where it could fall. Let's say Bitcoin gets a bounce. Maybe ETH Bitcoin gets a bounce. I'd love to see ETH Bitcoin get a bounce. It has just been so weak. If we look at some of the indicators, let's go ahead and look at the bull bear power trend. Okay, it's been bad, right? It has been bad. Let's look at the reverse chanting momentum oscillator rolling back over again. Not what we want to see. What about the wave trend? That's one we've been watching really closely. Keep in mind this is on a 2 week, so we're getting a pretty good view of structure. Man, it's as low as it's ever been. Love to see that fourth dot print. Remember, we got 4 dots on top. I talked about the idea of potentially 4 dots on the bottom. Snabble RSI. I mean, it's just low, right? It's at levels where we expect a bounce to happen. Like, we haven't been this low since October of 2023, and we got a bounce in October of 2023. 2019, we got a bounce. So I think ETH Bitcoin is super close to a bottom. It has to be. There's just not much room for it to move down. And we're already seeing signs that Bitcoin is likely in its, at least going to carve out some kind of bottom, like a temporary one potentially. Oh, we never know, right? But again, I think as long as the stock market's bearish, Bitcoin will also be bearish. ETH Bitcoin's bear bubble is the longest and largest it's ever been, even rivaling the bear bubble from June of 2018 to March of 2020. It looks pretty similar, doesn't it? Stretched out version of this. What happened after the second part of the bubble is the bubble started to come in, and we got our bull bubble. And then we got another bull bubble. We got a long bull echo bubble from the bear echo bubble. So I think ETH Bitcoin is going to put in a freaking long bull market, longer than the last one. How long was the last ETH Bitcoin bull market, you ask? Well, if you consider it having started here, which I think is a reasonable place to say it started, and it ended here, that was an 840-day bull market. 840-day bull market. If you define that as the bull market. And if you want to shorten the bull market, of course, you would lengthen the bear and say it started here. That's still 700 days. That is nearly a 2-year bull market. What would 2 years from now be? Just to equal this past bull market, 2 years from now, that would be a bull market that lasts all the way into 2027. Middle of 2027. And I think that's actually likely to happen. I think that the next leg of this bull market, once this bear leg is over, I think we're likely to enter into another 2 to 3 years of bull, because we'll have cleared the garbage out with the economy. We've got the ETFs, more institutional adoption. I really think that's a likely thing to happen. It's going to be great for Ethereum and altcoins. Speaking of altcoins, let's take, what should we look at? Probably total 3 minus USDT divided by Bitcoin. I want to get the crypto cap on Bitcoin. Let's see if this will pull it up. I don't, yeah, I will, I think. Maybe not. Let's turn off federal funds rate. I do need to call up a different Bitcoin. I need to call up the crypto market cap for Bitcoin. I've done it many times. I just sometimes get forgetful. I'm gonna go ahead and do that. Look, altcoins look bad, but they're holding up better than most people think. Look at where we are. Still at higher levels. By the way, I did call up crypto cap, so hold on one sec. Okay. So we're currently at alt Bitcoin valuation of 0.38. Let's go ahead and throw on some Heiken Ashi candles on the 2-week. There it is. The trend is really not clear, is it? I can turn off the Gaussian channel, but I don't want to turn off just the Gaussian channel on the 2-week looks like it's getting close to inflecting. This is a pretty strong alt Bitcoin leveling process. I mean, look, we could take the plunge at maybe the end of a recession, right? We could take the plunge, but this has held up pretty well, I have to say, impressively well. Alts against Bitcoin. Let me go ahead and turn off the Gaussian channel. And when you look at the Heiken Ashi candles, they've been red, but they've been kind of indecisive red. This is not painting a picture of Bitcoin being like the king that it once was. It's still the king, right? I mean, compare this to what happened in 2020, at the end of 2020, right? Like, we really saw a nosedive here. March of 2020 kind of looked like now, right? So what are we about to see? Might we see some, mean reversion from altcoins and then a giant dump, kind of like last time? It could happen. Happened here. Something like that could happen later on this year. Doesn't have to play out exactly the same way, but it could. So it's kind of hard to read much from this. Maybe we can pull up some indicators. We have a bull bubble that has started on all Bitcoin valuations. The Snabble RSI tells a different story, and so does the wave trend. But look at this. We had a bullish divergence dot in July of 23, another bullish divergence dot in September of 2024. This is actually moving down pretty slowly. Altcoins have actually been holding their own against Bitcoin fairly well. What is Bitcoin dominance doing? Okay. I know Bitcoin dominance has been very strong. No one can argue that. I mean, it wicked all the way up to its 786 fib, and it is super strong. Look at these Heiken Ashis. These are beautiful Heiken Ashis. This is as bullish as it gets. Right? Could Bitcoin dominance move back up to the 786? That could be the moment at which altcoins take the final plunge. So I do think altcoins could go through one more final plunge before they become really strong. And that will likely mark the blow off top of the Bitcoin dominance bull market that it's just been in forever. It just seems like it just never ends, right? Like 1, 2, 3, 4, potentially a 5th red dot. Now we got to see what happens here if we get a lower high. Didn't mean a thing though when it happened here. It really does look like this long bull market for Bitcoin dominance is coming to an end. Like you have sort of like a double top on the bull bubble. Snabble RSI looks like it's put in some kind of bearish divergence. So look, I think the time for like another surge up is now. If it doesn't happen now, we start to come down. The odds of that happening for Bitcoin dominance are decreasing. This is happening at the same time that altcoins are actually looking fairly good against Bitcoin compared to any other time in the past. And that is exactly what you would want to see. How about Ethereum dominance? Okay, Ethereum dominance looks like it has bottomed, or it is freaking close to bottoming. I mean, this looks like the ETH Bitcoin chart, unsurprisingly. But look, as long as it doesn't take out these lows, the low of 7% dominance, we are now at a 8.71% dominance. Let's just not take out those lows. What's the Gaussian channel look like? Yeah, we're out of this red zone. I thought there was once upon a time I thought that this could actually provide some kind of support. That didn't happen. Um, Throwing a Gaussian channel, okay, clearly in a bear market, right? But it's not as dramatic of a Gaussian channel as what happened here. Ethereum is becoming more resilient with time. This is suggesting Ethereum may in fact be an oscillator and not a bleeder. This is a horrible Heikin-Ashi candle, but sometimes you see the most dramatic Heikin-Ashi candles at the end of a downtrend. Now, back in 2019, we did put in a double bottom. We could see something similar happen this time around. I actually think that when Bitcoin shows some strength on its bounce, that ETH Bitcoin is going to start to outperform. I think we're going to see the mean reversion move happen from ETH Bitcoin on the next Bitcoin bounce, whenever that is, whether that's the end of March or it's the beginning of April. The bounce seems baked in. When you look at the RSI, it just doesn't seem like we could spend that much more time down at the bottom without some kind of bounce. The one thing I've been watching like a hawk is stablecoin dominance. And I talked about this in my Telegram channel, but stablecoin dominance did put in a double bottom at the 382 fib, and it has been challenging the 618. I really hope it doesn't get above the 618. I think there's a high chance that stablecoin dominance gets stopped out at the red median line of the Gaussian channel within the next couple weeks. I think that is a likely outcome. This bear market looks like it's just gotten started. Gaussian channel is concave down. It's starting, it is still kind of wide, but that's normal. I honestly think that this could be sort of like an anomalous bounce, like a bear market rally, and back down we go. I do think that stablecoin dominance is going to achieve these low levels at some point. I don't know exactly when, but I think it's going to happen. Maybe when the money printers come on. So I think it's going to roll over, and I think it likely will be this point here. But I'm not saying it's going to roll over and go straight down. Like, we could see it range in here for a while. That is certainly possible. Again, we don't know how long this correction or recession is going to last in the stock market. Oftentimes, with Trump calling for it, could actually cause it to maybe not happen, right? Recessions usually hit when you least expect it, not when you most expect it. But nonetheless, we've got a correction certainly underway. So it'll be interesting to see if stablecoin dominance, the Heikin-Ashis, if we turn off the Gaussian channel, the Heikin-Ashis are getting stronger. It's clearly an uptrend. So we do need to be concerned about a breakout. If we break out past the 618, 6.67% is sort of the line in the sand. If we break out past that, I think we're in for a longer bear market. Okay. So we need to watch stablecoin dominance very closely to see what happens. Wow, it's a lot of data. Been going for almost an hour. If you stuck it out this long, you've learned a lot. I think people don't watch my videos like all the way through sometimes, and that's a mistake because you're going to miss out on a lot of stuff. But all the info you need is here. So bottom line is this. Yes, we're in a correction. No doubt about that. There's a lot of indicators that are showing that a bounce is likely within the next few weeks, April at the latest. This could be a fairly substantial bounce. And the big question is, does this take us to a macro lower high, or does this take us to a higher high? I think the odds are a macro lower high. I think sell in May and go away could still be a thing, although it's really hard to forecast that far out. But overall, when you zoom out to the 2-week time frame, things actually look much better than they seem. And it really paints a picture that while half one of the year could kind of suck, half two still looks like it could be fairly bullish. And not only that, but it seems like we're going to be in for a really long bull market for Ethereum and altcoins. Considering Ethereum, Bitcoin's bear market is now in 3 days, it'll be like 1,200 days. 1,200 days, guys. That is so long. That's like 3 years. It's practically 3 years. In fact, it's longer than 3 years. It's insane. So if ETH Bitcoin can prove that it's not a bleeder and prove itself as an oscillator, which I think is highly likely to happen on the next Bitcoin bounce, then I feel like we are in for the mother of Ethereum bull runs in terms of length. I don't think BlackRock and all these institutions would have, including World Liberty Financial, would have poured so much money into Ethereum ETFs if they didn't believe that Ethereum was an oscillator against Bitcoin. I think Ethereum has a bright future. It's the number 2 crypto by market cap. And I really feel that the second half of 2025 has a chance to transform the Bitcoin year we've been having, 2.5 Bitcoin years, into an Ethereum year. Sorry, it's been more than that. It's been like almost 3.5 Bitcoin years. Okay. And I think 2026 and 2027 even could be Ethereum years. So with some Bitcoin, dominance sprinkled in here and there. So yeah, I am still macro bullish despite all the carnage going on in the market. I do not believe we are currently in a recession. While the initial claim or the continued claims data and the unemployment data is kind of trending in the wrong direction, most recession metrics are not firing off. So I'm leaning more towards we're not in a recession than we are in a recession, and that this could just be a correction on the way to a much longer bull market that takes us into a big recession, maybe in 2028. So that's kind of like my thoughts at the moment. I could pivot those thoughts at any time when the data tells me to. The data is not currently telling me to. So if we can just wait it out for the next few months, even if it even takes that long, get through what is really feeling more like a secondary scare than anything else. Even if it does end up being a recession, which I don't think it doesn't seem that way right now, but data can change. Like the data now may not match the data in 2 months. I think we're going to be fine. I really do. And I'm really impressed with the way altcoins are holding up, despite the fact that they're down so heavily. They're the fact that they're even the communities are still around, people still believe in crypto. I think we're going to be fine. And I'll tell you if I think otherwise. So if you made it this far, you got my good news. If you didn't, well, you're not watching it, right? People who didn't tell people to watch this video all the way through, even if they have to watch it 2 times speaks. I just really don't want to leave anything out. All right, so thank you for joining me for another episode of Crypto Simulation Theory. I am the Gaussian Snake, and I would love to see you in my Telegram channel. Be sure to like this video, comment your thoughts below. Do you think we're in a recession or heading towards one, or do you think we're just in a correction, like a secondary scare? And what are your thoughts? I'd love to know. Tell me in the comments or come to my Telegram channel. Be sure to subscribe to my channel. Click on that notification bell. You've seen it on other videos. I probably don't need to point out where it is, but go look for it if you want to be notified of future videos from me. Until then, till my next one, I'll see you next time. Take care. Bye.